Look, I know a lot of people think I'm crazy. I know a lot of people think, okay, all this Bitcoin moon math is going on, and everyone's out here trying to, hype up the market, and it the space has been polluted by crypto people who are out here pumping and dumping coins and all this other stuff. And then you start hearing crazy numbers. And most people in my history have been terrified of big numbers. It's one of the reasons why I've noticed that, the more successful I've gotten, the fewer people that you meet that are still trying to pursue success, because big numbers scare people, right? And so if someone's already worth, 15, 20, 30, 40 million dollars, they're pretty happy with their life, right? They're more now afraid of losing it. The pain of losing it is greater than the ambition of gaining it. So, they stop pursuing it. But I wanted to just quickly outline, how not ridiculous my thought process is, and also outline from the very beginning what sort of prediction I've had, what that's been built on, what every number that I've ever shared with you is really built on. And again, this is why I would like you to subscribe to this channel, because this is what people need to understand. If you're in real estate, if you're in stocks, if you're in bonds, if you're in gold, hearing Bitcoin people talk about, oh, the price is going to $5 million a coin, $1 million a coin, blah, 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 sounds like a bunch of BS. And I want to explain to you the conservative thinking that I have around it. I think that my numbers are relatively conservative overall. So if you're in real estate and you're sitting there thinking there's no way Bitcoin could go to $1 million a Bitcoin, you're really going to miss out on an opportunity to protect the value of your wealth. And again, like I've mentioned in live streams and other videos and podcasts, I think that the US and the UK are not really going to do a wealth tax, a blatant wealth tax. And if they do, there'll be ways around it. The way they'll do it is they'll redistribute the wealth that the majority of the boomers have. And the majority of the boomers have their wealth in real estate, right? And it's really easy to redistribute real estate wealth, because all I do is I put a bunch of regulations up in place, and it starts forcing people to sell their real estate, like the law that's going through Congress banning, hedge funds from owning single-family homes. That's going to crash the price of single-family homes. And I'm not saying it's going to pass right now, but you bet your ass it's going to pass in the future, because it's the only way that you keep the peasants happy. So really understanding that everything you've built, just like my parents, everything that they've built is dependent on them being able to make the right pivot at the right time. And I was extremely lucky, because when I first started in real estate, a few years before 2007's credit crunch, I had the opportunity to see that the real asset was not the real estate. The real asset was the scarcity and the liquidity surrounding the scarcity. So I want to take a second here just to explain to you how conservative my thought process is around Bitcoin, and why I decided to allocate such a large portion of my net worth into it in 2020. And it's extremely simple. Every single thought process I've ever had about Bitcoin, every single price prediction I've given you about Bitcoin, every time I've ever said, oh, this could happen, that could happen, it's based on one number. It's based on a 1% allocation of existing liquidity moving into Bitcoin over the next 30 years. That's it. There is nothing more, nothing less. If we get to a point of a 2% allocation in Bitcoin over the next 30 years, everything I'm saying is absolutely bearish, and I don't know what type of world we live in if that happens. I don't care what anyone else is saying. My fundamental theory around Bitcoin and its price appreciation, everything else, is around a 1% allocation overall. Now, let's talk about this a little bit so you can just see how this scales up. The one thing you have to understand about Bitcoin is that a 1% allocation going in to buy Bitcoin is terrifying, right? And I'll tell you why. There was a great tweet that I read. I can't remember off the top of my head. I think his name is Darren. I can't remember exactly, but the tweet was this. The GLD ETF, the gold ETF, had $1 billion of inflows extremely quickly. in the first week, I believe, or the first few days. If that $1 billion was to come in, if the same amount, not the more, not a single penny more than that, even though the BIT or futures ETF already beat that, but just that, $1 billion, the ETFs would have to go and buy, at today's prices, 380,000 Bitcoins on the market in the first week, right? That's double MicroStrategy's holdings, right? That's half of GBTC's existing holdings. There's only 1.8 million Bitcoin left on exchanges, and that will go down as we get closer to the ETF, as people realize, maybe I shouldn't sell this. As I've been saying, the HODL rate will increase. That's absolutely terrifying. That's with $1 billion, right? So all of my thesis has been around 1% allocation over the next 30 years of existing liquidity. So I'm even in my blueprint is, it's so conservative, it assumes that the United States stops printing money from today, or from the day that the ETF launches, right? It stops printing money. And so if we were to look at that, right, total liquidity in the world is $900 trillion. And if 1% tries to find its way into Bitcoin through that, right, you're looking at $330 trillion in real estate, $140 trillion in US in stock markets, 100 and something trillion dollars in bonds, $12 trillion in $13 trillion in gold, et cetera, et cetera. Add all of that up, it's about $900 trillion. The biggest market is the derivatives side, which, by the way, I'm going to do a video on how the derivatives markets that are growing around Bitcoin as a result of the products that are coming out will affect Bitcoin. I believe the derivatives markets will be bigger than the spot markets, and I would like you to subscribe so that you don't miss that video. It's coming up in the next few days before this ETF is due for approval. So going back to it, $900 trillion of global liquidity. If 1% finds its way into Bitcoin, that's $9 trillion, right? That's $9 trillion. And if I was to take that $9 trillion and try to get it into Bitcoin in a very, very fast method using the Bank of America price multiple, it's absolutely ridiculous, right? So I'm having to halve the Bank of America price multiple down to 50, right? And that takes me to $450 trillion of hold on one second, right? $450 trillion of a market cap, right? If I half Bank of America's, because by the way, as the price of an asset goes up, the multiple comes down because it starts getting saturated with capital, right? So if we look at $9 trillion, just 1% of the global liquidity going into Bitcoin over the next 30 years, you're looking at $450 trillion market cap based on 50% of the Bank of America multiple over time. And that works out, if we go 450 trillion and we divide that by 21 million, right? That works out to a $21.4 million Bitcoin price. $21.4 million. Now, a lot of people think, okay, that's kind of crazy. I'm talking about simple math here, right? You have a market cap, you divide it by the fully issued supply, and you have a price. And that price, based on a $450 trillion market cap, which is 50% of the multiplier of Bank of America, the bull market multiplier, you're looking at a $450 trillion market price. Divide that by 21 million, which is the fully issued supply of Bitcoin, and you're getting a price of 21.4 million. This completely excludes the amount of lost coins there are. It completely excludes, the amount of coins that are trying to pursue, or people that are trying to just hold their coins and never hitting the market, because all I'm using is the fully issued supply. The amount of revolving capital that will be needed on a daily basis, the actual liquidity to get there, is going to be much less. But the market cap can explode to $450 trillion extremely easily. We're talking about 1% of existing liquidity and a 50% reduction in the current bull market multiplier effect. And you're talking about a Bitcoin price of $21.4 million. Now, that sounds absolutely nuts to someone who is a real estate investor, et cetera, but I would say that it sounded nuts to my grandparents when they were forced to move to the United Kingdom and they bought their property for £5,000 to think that in 2023 that same property is worth £600,000, right? I think that would sound ridiculous to them too, and yet that's what's happened, because at the end of the day we're talking about basic simple math. So I don't want anyone to think that British HODL is out here talking crazy numbers and it's based on math that just doesn't make any sense. This is based on a 1% allocation of existing liquidity, no more liquidity being printed, etc., etc. And arguably, there's a lot more people who are in Bitcoin that are extremely more bullish than I am, based on their price predictions. Now, I'm going to be very, very conservative, quote unquote, with the way that I think about liquidity. I'm also going to be conservative with how long it takes to move. And this ETF is extremely important because this ETF is going to move this capital very, very slowly, yet based on price, it's going to move extremely quickly because of the multiplier effect that we have on the asset. So it's extremely important that you understand that my numbers, every time I speak about a number, it's based on the fundamental understanding that in 2020 I decided that over the next 30 years, 1% of existing liquidity will find its way into the hardest, scarcest asset humanity has ever created, and that'll be $9 trillion. Place it on the multiplier effect, and you're looking at a Bitcoin number that's absolutely ridiculous. This doesn't include anyone moving, 30% of their real estate portfolio like my parents did, right? It precludes all of that. It's a 1% overall on the existing liquidity, and this should terrify the hell out of you. And why I'm going to spend the next few days talking about how ETFs are going to market. I'm going to talk about how liquidity is going to start moving from one asset to the other, and how that $9 trillion can find its way out of that $900 trillion empire into Bitcoin. But I wanted to do this video because we're on the eve pretty much of this ETF coming out, and I want you to realize that everything I'm saying is not some moon boy math bullshit. Right? I'm looking at this as an investor. There's a $900 trillion empire. We have the hardest, most scarcest asset. I think I can reasonably assume that 1% of that existing liquidity will move into Bitcoin over the next 30 years. And that's what my quote unquote investment thesis for my own portfolio is based on. Bitcoin is the most special asset with the most scarcity that we've ever experienced. I don't think we'll ever experience anything like that again in my lifetime, at least, because these assets don't come around that often. And so it's extremely important to take this seriously if you haven't already. But, despite whether I think it's 1% or whatever, please subscribe so you understand what's moving in the market and how things are moving. But ultimately, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.